raising money for a good opportunity is actually not as hard as some people would think. I think having both skill sets is important, but let's just focus on one skill set, and that is like going out, sourcing deals, and understand what it is a commercial investor is looking for.
Hey, CRE Circle. I'm so excited to welcome Shane Melanson to the show today. Thanks for being here, Shane.
Thank you, Brittany. It's good to be here.
Yeah. So for those who don't know Shane, he is an author, developer, syndicator, educator, transacting over $250 million for clients and 70 million personally in Canada and the US. So this show is for everybody. It's a super impressive resume. I'm just really looking forward to hearing how you got started in all of this.
Sure.
And did you start in commercial real estate? I know that's your focus now. Or did you start in the single family world? What did that look like?
Yeah, so I got started in residential real estate. So I think my first investment property was a 1.5 story kind of wartime house in Calgary. And I want to say I paid about $180,000 for it. I had no idea what I was doing. I used to bartend, and one of the guys that I bartended with was also a realtor, and he said, "Hey, you've got some money, you want to invest, I'll take you out." So I would say the one thing I did right on that property was I negotiated hard and I bought in a good area, right? So it was Mount Pleasant, which is kind of inner city, and there was a lot of infill going on. So that was kind of how I got started. And I learned a lot on that deal. I executed on it. I made some money. And so it gave me confidence to do the next property. And so I continued to kind of do fix and flip, long-term rental. And then I started to move into building spec houses, because you have to remember, I think it's important too. So 04 to 07 in Calgary was kind of a boom time, right? You didn't have to be very smart, at least in my opinion, to make money. And so I kind of fumbled my way through. I would hire some coaches. They were usually out of the US, and their whole thing was lease options. Well, back then doing lease options or sandwich lease options in Calgary was not, sellers weren't that motivated because they could get over list price in one day. So why would they sell to someone that wanted to do some sort of creative financing? But it continued to help me figure out where I wanted to go with my own investing. And about in 06, I think, or 05, I got a job at Sun Life in the commercial finance arm. And so that's kind of how I got into commercial real estate from the lending perspective. And it was at that point that I started to see there was two people that really stood out. One guy was a farmer. He grew up in kind of northern Alberta, and another gentleman came from India with, like, I don't know if it's true, but they told me he came in with $20, and they both amassed. One gentleman was 180 million when I worked with him, and the other guy was about 400 million. Wow. And they did this through a lot of what I call club syndications, right? They would raise money from a small group of high net worth investors. They'd find a value add property, and they would fix it and either refinance it, keep it, or sell it and scale up to the next property. And so I would see this, but I still didn't know how to do it myself. And wasn't until I met my father-in-law, who's been in the business of commercial real estate for, well, they're publicly traded. They have a significant portion of their real estate here in Western Canada and the US. And he brought me in and showed me how to raise money, find deals, syndicate. And so we did that personally. And then I also helped him with his family company. So that was kind of the start to finish.
Wow, that's amazing. It's interesting because at that job, it really showed you the scale and you had that proximity to people who are doing it. Yeah. And I think, if you weren't in that situation and you didn't see that, it's easy to kind of get into the single family and you kind of stay there for a long time. And what I kind of say is, like, think bigger sooner, because I wanted to get in commercial real estate for a long time. And it was just always these questions and hesitations and roadblocks. And I think a lot of it is the mindset of just being able to, like, really go for it and take action, but it's scary. So I think that causes a lot of hesitation. So it's good that you had that proximity in those examples. And what do you think the difference is between that residential, single family, and commercial, and why did you want to focus on commercial?
Like, when I started working with Andy, my father-in-law, like, I remember the first deal, and we would go out and look at properties and we would tour and we would talk to brokers. And at the end of the day, he would come back and he would kind of ask me some questions. And I realized very quickly how naive I was. Like, I'm by nature a very trusting person. And so I would take things at face value. And Andy is not like that. He will push back on everything. And oftentimes people are either only giving you half truths or what you want to hear. And so the challenge, if you will, of someone new is you don't know what's fact versus lying through omission. I'll call it that way, right? They tell you enough information so that you say, wow, this is amazing. And then you start going down a path only to realize that fundamentally there's 5 things wrong with this property, but you don't know that until after you close. And I've seen when I was at Sun Life, there was one gentleman in particular, and he didn't come through us, but I just learned about him, and he lost $6 million buying the wrong property, right? He overpaid. He didn't structure it properly. He went from doing 100 houses a year to doing his first commercial property, and he didn't have any guidance. And the person that sold him the property just fleeced him. I mean, that's just the reality. And it wasn't just him, it was him and a bunch of investors. And so you see this, unfortunately, because if there's lots of money to make, it does attract some people that will play the game differently than maybe how you would think it should get played, I guess.
And how do you think people who are new and they don't necessarily know the right questions to ask, they have an idea and they're getting into it and they're trying, but then how do you mitigate that risk of losing money and getting into the wrong deal? How do you even start?
The best way to learn this literally is someone in your town that you trust, that understands the market. You can find someone that will teach you and that you trust, then that would be your best. Okay, so I had Andy, not everybody's gonna have that, right? I paid him because I left my 6-figure job to work with him full time. So the opportunity cost for the first 18 months was close to $200,000, right? Because I left a good paying job, and then I spent a bunch of money on due diligence to learn this, and then I had to obviously live. But that's how I learned it. Now, I get not everybody is going to do that and has that option, but I think that would be the best. So if you could find someone in your market that is not incentivized to tell you something different, then that would be probably the best way to learn. Secondly, I think podcasts like this, books, getting just a lay of the land so you understand the terminology and the language, I think is important, because people will be less likely to try to pull one over on you if you understand and speak the language. I remember having a conversation with a fellow one time, and he was like confusing IRRs, cash on cash, cap rates. And so he was trying to sound smart, but you could tell that he just unfortunately didn't know what he was talking about. And right away, I'm thinking like, someone could take advantage of this person so quickly because they are confusing really basic terms in commercial real estate. And so I don't think you have to pretend. If you don't know something, it's just very easy. It's like, I don't know what you're talking about, right? Like, why is this a good deal? Why is that a bad deal? If you can get around a group of people that are all working to support each other and there's no incentive, like if you go to a broker, it's going to be difficult to get unbiased information, right? Like, what does Warren Buffett say? Like, you don't go to your butcher and ask him whether you should order meat, or you go to your hairdresser to say, do I need a haircut? Like, I don't do that, but
that's a great lesson.
Yeah. So those would be some of the things. And I would say that there's kind of 4 questions that you learn in CCIM, which is kind of, getting into the world of commercial real estate, and is how much money goes into the deal? When does it go in? How much money comes out? And when does it come out? And if those 4 questions get answered like succinctly by someone, I think that is, even if a person didn't know very much about commercial real estate, if you're able to ask that of someone, then that will give you a good start, I guess.
I love that. And I love what you said about even working for someone if you don't have an Andy, because people always say, well, I don't have that, but looking for that, learning the basics, then looking for that, you can work for someone. People in commercial real estate are busy people. So there's always something more that we could be doing, even as far as promoting, advertising. Like, you can film for them, you could do content creation, you can do so many different jobs. Like, just look at what skill sets you have and then really work. And you probably aren't going to get an answer reaching out the first time. You might not even get a response because, right, commercial real estate people are busy. So it's like that follow-up and that consistency and just really wanting to provide value and help. And even if it's for free, like you said, it was that cost, but it gave you that opportunity. So it's like, you have to look at that. So maybe you're losing money in the short term, but the long-term benefits and education of working for someone who knows what they're doing and can show you the ropes, that's such an amazing way to start.
Yeah, like, I mean, like, someone that wants to get into the world of investing in commercial real estate, I think that the easiest path, if you will, is finding value add opportunities.
Mm-hmm.
It's the hardest, but it's also where a deal starts, right? Because as you get in and more successful, raising money for a good opportunity is actually not as hard as some people would think.
Mm-hmm.
I think having both skill sets is important, but let's just focus on one skill set, and that is like going out, sourcing deals, and understand what it is a commercial investor is looking for.
Yeah.
And so, like with Andy, like every Friday we would sit down for about 3 hours, and he would say, "Show me all the deals," and he would just pepper me with questions, right? Who's the neighbor? What's the access? What's the price per square foot? What's the land? What's this? What is this? Like, oh my, like, and so it was very frustrating, but I started to realize that I needed to narrow my focus, and I had to really understand locations. I had to understand an asset class instead of just throwing stuff against the wall, hoping it would stick. It was like, okay, guess what? Next time. So even before I start the conversation with him, I can say, here's the price per door, here's the rent, here's the vacancy, here's the developers, here's the FAR, here's the, and so all of a sudden it's like, okay, now I narrowed the questions he could ask from 50 down to 5, and we can go through deals a lot quicker. And then eventually we got into our first deal, and then the second one came much quicker. And then, so it takes a little bit of time and effort, and most people won't do that because in residential, you're used to doing volume. Whereas in commercial, it's like, I might do 1 to 3 deals a year, but if you can make 7 figures, then you don't need to do 20 or 50, or I'm sure that's what drew you to it as well.
Absolutely. It's the scale, and that's true. It's the upfront work that is really hard, and it might take for me, it was a few years to get my first commercial property when I first started trying, up until I first got my first one. So it's just that, really, I don't know, it's just consistency every day, putting in that work, putting in the education. And if you do have a mentor, someone that does want to teach you, it's just really showing them. You have to prove yourself. It is just a lot of proving yourself, I think, over and over, and coming prepared, and really, they can see that people will believe in you and they'll take a chance on you if you're willing to put in the work. I think that's the most important part, over knowing everything or anything like that, or coming off like everything. It's not really about that. It's the effort and consistency with it.
The way that I got into it may not be right for everyone, right? For obvious reasons. But what I have seen, and what I've actually, one of my, a gentleman that I mastermind with, just the two of us, he started a daily podcast. Okay. Now I think a daily podcast is crazy. But I think even just having a podcast that you do once a week, where you can interview people that have done things that you want to do, right? Because once you have a platform, and you essentially say, hey, like, I would love to have you on my podcast to interview you, and you start to do a few things. One, you start to learn it. 2, you start to associate yourself, right? Like, that was one of the things that my friend, I don't want to use his name just because in case he doesn't want me talking about it too much, but he said, Shane, once people started asking about, his name is John, everybody in the industry said, oh yeah, he's a great guy. Oh yeah, I know him. And so what happened is, even though he had never done a deal, or at least I think up to that point, he'd maybe done 1 or 2, because of his reputation in the industry, and his network was just growing. And it was just because he had a podcast.
Right.
And it was just because he was having conversations with people. And it gave him a reputation and credibility, where all of a sudden people took him seriously. They started bringing him into deals. He's got 300 million in real estate right now. Like, he came to me initially and asking me about how to get in. And now he's like, far surpassed anything I've done in like a couple of years. And it's just this diligent commitment. And he's just, I mean, I don't know anybody that works as hard as he does, but anyways, he just an interesting way to get into it. But people might just hear the last part, and they don't realize that he did 500 episodes to get to that first deal.
Mm-hmm.
And so he probably invested the better part of $100,000 into that platform and getting to meet people and going to all the seminars.
Mm-hmm.
But now he's got $300 million of real estate and this massive platform and incredible opportunities. So it's like, yeah, it was an investment of both time and energy and money, but look at the return. It's significant. So
yeah. And I think just starting is the most important, because you have to start. Lots of people get so nervous. I don't know how to do a podcast. I don't know how to do interviews. That's how I still feel sometimes. I'm like, I don't know how to interview, but here we are, like just trying. And then growing that network, it proved for him that allowed him to grow to 300 million in real estate, which is incredible. And it was through connections and networking and masterminding and interviewing and all that stuff. So I always say network. It was everything for me. And I built my Instagram up over, 5 years, whatever it was. I didn't realize what that would actually bring for me in the future. When I started, I knew it was important because I had a mentor just tell me you had to build credibility for yourself somehow, through some way. So I tried blogging, I tried all these different things, ended up on Instagram, then just was super, super consistent with it every week, every day, whatever it is, posting. And then I grew this massive network, got all these opportunities, but it was just that years and years of work that ended up, getting me to where I am today. So how do you stay motivated? What's your why for doing all of this?
yeah. Okay. So I can give you a clear why now because I spent the time over the holidays. Calgary was minus 30. So there wasn't a lot of things you could do outside with your kids. Right. So, for me, it's simple. I have 3 kids and, ages between 5 and 10. And I sat down and I think I'd kind of known this, but I didn't put it on paper until this year. And so I have a goal in terms of the net worth of assets that I want to pass on or equity that I want to pass on to my 3 children. And that is very inspiring for me. And it has done a few things. So because my family is so important, when I first started investing, I traveled all over the place. I was in Houston, Dallas, Phoenix, California, Ontario. I went out east. I went to BC, and so we were doing deals all over, and just to make money, right? And what I learned from all of that is that I was doing this, and I loved it because it sounded good on paper, traveling, and you're looking at great deals and big multifamily projects, but I was like, I get to my hotel room and I was just lonely. I was just like, why am I doing this? Like I'm away from my family for up to 2 weeks at a time. Like when we did our 1,100 acres in Ontario, that was like 3 weeks at a time. I would be gone. And I realized that I don't want to do that anymore. So every project now I vet through how, do I want to go? Will my wife and kids come with me? Can I get there fast? In terms of like, can I fly in and out in a day or 2 days if I need to? Do I like going to these markets, right? Like I don't like being on a plane for 4 hours. I just don't. So some people don't mind it. For me, it just wasn't my thing. So that's kind of how I've started to evaluate any opportunities that come in, because as you get into the business, you attract a lot more. And it's actually the hardest thing is to say no, I think. And so anyways, now I know what it is that I'm doing, and I know the type of assets I want to pass on to my kids. So that I think has allowed me to continue. And frankly, one of my core values is living life on my terms. And so while I still work, I wake up, I work in my own home office. I don't have someone telling me what to do. And that is valuable enough for me that I'm prepared to take some of the uncertainty and the unknowns, because let's face it, commercial real estate, it's cyclical. So sometimes it takes a while to do a deal, but for those reasons, that is what keeps me going, I guess. So I'm not sure if that answers the question, but it's kind of like, I have this very specific goal. It's really for my kids, because at a certain point you only need so much for yourself. And frankly, I love it, right? Like I really do. Like when I was on my honeymoon, I was looking at properties. Like I didn't need to, but that's what we did. Like we would go to open houses, we would go look at stuff, and because my mind is just switched on that way. So if that's not for someone, then that's okay. But that's,
Absolutely. And I think tying those goals to a deeper reason and why, that is what's going to keep you pushing through. Because if you don't have that reason, it's going to be really hard to keep going when it gets really tough. And I really like what you said too about your core values, because that also is a gauge on how you make decisions and how you say no. It's okay, what are your core values? And I do suggest that everyone listening, you kind of write that out and maybe write out 3 core values where you can make decisions based on those. So it always keeps you headed in the right direction towards your goals and what you really want, because it's easy to get distracted by all these other things. But if you have those core values for yourself personally and for your company, then that's what I think it makes it easier to make decisions.
Well, and so this is really important, I think, too, and that is if you're new to the world of investing in commercial real estate, I think what happens is people come in new and they say, well, I just want 10,000 a month. I want 20,000 a month. Mm-hmm. And so it's like, okay, well, that's pretty surface level, right? Because you could go buy a franchise. You could there's lots of different ways that you could potentially make that kind of income, right? And just having been a broker, having sold commercial real estate, when someone new comes in and they are just surface level reasons, like I just want to buy a property because I just want to make passive income, what ends up happening is through due diligence, there's going to be lots of hurdles. Like I've never had a deal go just so smooth that knowing, like there's no stress. Like I'm sure your deals, there's bumps in the road. Absolutely. And the person that isn't committed is going to look at that and say, oh, that's a sign I shouldn't buy this. Versus these are the barriers to entry. And this is why so few people do this, right? It's like a perspective and a mindset. And it's like, I'm committed to doing this and I'm going to get it done. Obviously, if something comes up that you realize you shouldn't do the deal, well, then you walk away. But I'm just saying like if it's just the normal course of action that happens in a commercial deal, if you have a strong enough desire and bigger than just, I want to make money, that I think is going to be what gets you to your first deal and over the goal line, because otherwise there's going to be a lot of situations, I think, that challenge a person, and they will easily, not easily, but they may perceive that as a reason not to do the deal. And then what happens is that is why brokers are so fearful of working with new commercial real estate investors. It's because they only get paid for when the deal closes. They don't get paid for trying. Right. And so if they take 6 months and they're counting on that $100,000 to pay for their mortgage and all the rest of it, and then the buyer walks away at the last minute, which happens. It's happened to me. It's happened to most people I know. You don't, like, there's no recourse. It's like, I don't get that time back. Right. And so just deal certainty, and I don't know, I'm just rambling, but hopefully that helps someone.
I think that's spot on, because that is a struggle with the new investors, because it's like this kind of catch-22. It's kind of like, okay, well, you're new, so it's hard to work with brokers, and brokers need to know that you're going to close the deal. So how do you get that point to being able to close the deal when you're brand new? And it's like that track record and having backing behind you. That's why mentorship and all those things are super important. So no, I think that's a fantastic point to bring up, and something we do talk about a lot, because even my friend Ginger here, who also works for me, but she's getting in commercial real estate. She's trying to buy self-storage deals, all these things, and she's having difficult time with brokers taking her seriously, because it is that kind of point where it's, okay, I'm new, but I'm trying, and then how do you prove yourself? So I think that is over time. But what do you suggest in that stage? We kind of went over this already, but.
Well, okay. So like, let's just take Ginger, for example, because we traded some emails, right, to set up this call. So if I was talking to Ginger, and she might be off screen and listening, I think one of the biggest things is it's a concept I call like a programmatic investor. And so if you can speak the language of saying, I don't know self-storage, so I don't want to use that as an example, but I'll use industrial because that would be a good example, right? So if I'm calling a broker in a new market that doesn't know me and they don't know whether I'm real, I might say something like, like a little bit of small talk. Hey, I saw the property 123 Main Street, the industrial one that's 20,000 feet that you have for sale. I'm not sure if that fits what I'm looking for. Why don't I tell you a little bit about my program in terms of what it is that we're out looking for? 20 to 50,000 square feet, multi-bay. I like the bay sizes around 3,000 to 5,000 feet. I'm okay with drive-in or dock level. prefer 24 foot, but I'll go to 20. So what happens is, this is called like, so I get coached by Oren Klaff, right? Pitch Anything. And he calls it a flash roll. And so this flash roll, what it does is it shows that you speak the same language that they do. And I'm not being so specific. Like you'll notice I didn't say, I'm looking for a value add deal with 20% vacancy and upside. And because the broker is going to say, if I could find those, I would do them, right? Like if I can make you $1 million, why wouldn't I make me $1 million? So instead, I would say something like, I'm okay to deal with hair on a deal, or if it's got problems, like, maybe some of the leases are expiring in the next little bit, or maybe there's just some mom and pop tenants. Like, I'm looking for something that I can solve. I'm not looking for a coupon clipper. I usually say that, right? I'm not looking for, a five cap with no upside. Like I'm looking for something. It doesn't have to be today, but hopefully down the road, there's something that I can add some value to. And when you do that, it does a few things. One, the broker doesn't say, "Oh, are you pre-qualified?" Like if a broker said that to me, I would laugh at them. Like that is like but if you come across as a rookie or a newbie, then what they will do is they will try to pre-qualify you so that they don't have to spend any time with you, right? They will basically say, okay, well, what do you own? What's this? What's that? But at least in my experience, when you come across that way, they don't ask those kind of pre-qualifying questions because you sound like you know what you're doing. Now, let's say they said something along the lines of, well, what do you own right now, right? That is where you would leverage off partners, really, right? I would say, well, in your market, I don't own anything. But in my market, we have a couple of properties that are similar to that, right? My partners and I. Where do you get your equity? What, like, I've never had someone ask me those questions, but if they did, I would say, well, we do LPGPs. It's pretty simple. Like once I find the deal, we put up the seed capital, and then we have a group of high net worth investors that come into our deals. Right? It's just like, and I don't try to justify it. It's just like, that's how it is. And so I don't know. Hopefully that might help Ginger if she just kind of nails that thing that initial opener, if you will, that flash roll. So
I love that. I think that's amazing. And Pitch Anything is great. And to nail that and then keep having those conversations, keep practicing. And then you can leverage even in, our CRE circle group. It's like, I have a group of investors who have a total of whatever real estate. And these are people that I'm working with. And you just have to prove your credibility and that track record. And that can be a combination of everybody that you're working with. So I think, and it's just like combined knowledge of the group instead of just coming off as just what it's like, no, there's experience in all these circles that I'm in and mentors and all those things. So you can leverage in a bunch of different ways. But I think that's amazing, just having that track kind of nailed down, and practice with friends, practice with whoever until you get it down, and then you make those calls.
And I will say, like, because I could just imagine if a broker is listening to this and they'd say, okay, yeah, maybe I would take them seriously. The next thing is when they send you an opportunity, you really want to be able to act fast, right? Like you should have an LOI that you have prepared, 2 pages, whatever it is. And I would vet it through your lawyer and just be ready to get that LOI in, to start getting control of that deal, and just move with a sense of urgency, right? Because that brokers are looking at that too, right? Like there's a saying, time kills deals. And so you want to make sure that you've got your deposits ready, that you have your lawyer, your team. Like I wouldn't necessarily just say shooting from the hip, you have this pitch down, they send you a great deal and you're like, okay, now what do I do? Because then you just ruined a relationship. And in commercial real estate, in Calgary, if there's 5 industrial brokers, you burn a bridge with 1. Now you're down to 4. If those guys end up talking, now you're down to 3. And I've just seen it over and over where they call them flakes, right? It's like, oh yeah, did Frank give you a call on that property? Yeah, we toured him, asked him about his financials, and it's just like he's just wasting our time, right? And so now all of a sudden it's like nobody takes his calls. So you have to go to a different market or try to find deals yourself, which that's an extreme example, but it can happen.
No, I think it's the truth. And you can't be wasting, you have to really be considerate of people's time. You don't want people working for free in any way. So you have to be serious and they have to take you seriously, and you have to do what you say you're going to do. So that's extremely important. You want to have that integrity when you're working in commercial real estate. And
Absolutely.
the brokers are number one relationships that you can have. They're going to be the ones who bring you the deals and eventually make you wealthy, because they're the ones that are going to
For sure.
get you the deals. So I think those are probably the number one relationships to keep intact.
Yep, I agree.
So when you were looking at different markets, because you have properties that you said in the US and you're in Canada, and when did that kind of start, and why did you guys go to the US, and what are the differences there?
I can't recall exactly why we said let's go into the US. Right? I don't remember the rationale, but I do remember that we said, like, he basically invited me on a trip, and so got on a plane, flew into California. We went to Palm Springs. We actually bought some properties there, and then we went to Houston. And he comes from more of like the office, retail, industrial. He didn't really do much in the multifamily. So for about 12 to 18 months, I can't remember the exact time, we looked at like all these office buildings, some industrial, some retail. And I'm thinking, if I'm going to make any money, like, I got to focus on properties that I have a better understanding of. And so I remember I flew down to our properties in California to go check on them after we had closed. And then I'm like, I'm going to tack 3 days on. I'm going to fly to Houston. I'd set up some meetings with some brokers. And this is kind of like after the credit crisis. So we did see an opportunity, right? Where it was like, okay, like everything is being fire saled, whatever the term is, in the US, because there just was very little liquidity. And I had this thesis, like, to give you perspective, in Houston, like A-class properties built within the last 3 to 5 years, big pools, like places you could play, like shoot pool and billiards and whatnot. I mean, it's just beautiful. I'm like, I would live there if I didn't have a family. And we could buy those for 83 a door. Like 83, the replacement on it, in my estimation, because back then construction was a lot less. And I'm like, I don't think you could build this for 100 a door. So that was one of my first things, right? Because I'm comparing it to Calgary, 08, 09, 150 a door for a piece of crap, right? I mean, that's just the truth. And Edmonton, probably 125, 130 a door. And I'm thinking, this is crazy. I initially went down there thinking, like, can we buy these things strata and then sell them as condos? And we realized that wasn't really a market because property taxes are so high. I said, okay, well, I still feel that there's an opportunity here. So anyways, I wrote an offer, and then I, without getting into the details, basically passed that contract on to my in-laws company. And then that was the first 240 unit Class A multifamily. And then we did another one, because what happened is, as soon as we were taken seriously, then we started to see more and more deal flow. And so some of the things that we looked at were, where's the job growth? Where's the population growth? Texas seems similar to Alberta, so in terms of economy and oil and gas. And so we kind of gravitated to that. Also proximity, right? 3 hours, 3.5 to get to Dallas, and 4 to Houston versus 7 to Florida. And so it was like, some of it not even that good of a reason, if you will, other than proximity. And so that was kind of how we started to identify those markets. And then once you got into it and you started to build those relationships, so the 12 months, even though we didn't buy a property, I got to know a lot of these people. We went to gun ranges and, like all the things that you do in Texas, if you will, and out for dinner, and you just got to be friends with them, football games. And eventually we closed on a deal, people made money, and now I was like, okay, these guys are for real. And now they started to send us opportunities, more than we could really handle almost. So.
Wow. I think it's great. And as investors, we can invest wherever we want to. I don't know if the strategy, that's where it kind of gets overwhelming, I think, for some people as well, because it's like, wow, there's so many, Texas is amazing, and this is amazing, and that, and then it's like choosing a market. I think it is better, like you said, sometimes it's just choosing something and going for it rather than, all these other reasons and looking at all of it.
Yeah, like so, because I want to answer your question in terms of why we did it. We didn't jump around and chase markets. Like specifically, I've got a 65-page PowerPoint presentation that I brought to the board saying why we're going after Houston, why we're going after Dallas. And it was like very clearly articulated. And then inside those markets, there was like 3 sub-markets in Houston that we went after. not all of Houston, because it's 6 million people.
Mm-hmm.
And same thing in Dallas. Like there was like very clear places that we really tried to understand, because trying to understand all of Dallas would be overwhelming.
Mm-hmm.
And if I'm helping someone, or just you're listening to this, I would say investing in your backyard is the first thing, because it is a relationship business. I was on a plane every 2 weeks to Houston to build those relationships.
Mm-hmm.
Most people don't have that luxury, and I was still an outsider until I closed my first deal. And in today's market, so you have to remember, 2009, 4 or 5 Class A apartments traded.
Mm-hmm.
Nowadays, probably several $billion will trade every year. And so if you're an outsider, you have no track record, no relationships going into a new market,
Mm-hmm.
it's like you're just stacking the deck against you for success. I feel that there's way better ways to leverage your time, your money, and focusing in your backyard is the first thing, because it's so easy to go for a coffee with someone versus like, I got to get on a plane, I got to set up meetings. Hopefully they take me seriously. Hopefully, it's there's a lot of variables, I guess. And I think in your backyard, first and foremost. If not, then where do you have relationships, connections,
Mm-hmm.
and starting there, and then focusing on an asset class in a bandwidth of a size that makes sense.
Mm-hmm.
Those would be a few ideas.
Yeah, I love that. And I think when you are focused in and you are in your backyard, something you're familiar with, I like when you said too, that somewhere where you have relationships, because it's all about relationships. So building those, and then once you get your first 1 or 2 in your backyard, and then you build that momentum, and then you're like, okay, this isn't, and then you can kind of pivot from there. But I think focusing on something where you have some knowledge of the area and the market, and then you have the connections, then you get one, and then you build that momentum, the confidence, then you have a track record, then you could start looking at other markets kind of down the line. So I think that's
absolutely
awesome. So when you're looking at markets, you're looking for, do you have a criteria that you said the job growth, population growth, do you have any other metrics that you kind of look for?
I would say the first thing is it a market that I believe in long term?
Mm-hmm. Yeah.
And so what are the things that go into that? Well, obviously jobs, population, cost of living. I mean, those are drivers, right? Because take the US. So Austin is just booming. Phoenix is booming. And there's obviously other markets like Boise, Idaho, and Salt Lake City. And it's because of like affordability and desire, like to live there, and job growth. So those are factors that kind of all influence it. Certainly you could look at things on a political basis in terms of like, what are the taxes like? What, like, are they pro-business? Are they anti-business? Like you look at California, and I love California. It's funny because this isn't, we should be talking about Canadian markets, but there's like 4 Canadian markets, right? It's like Toronto, Vancouver, Montreal, Edmonton, Calgary.
Saskatchewan. No, just kidding.
Yes. Yeah. But yeah, I mean, so I those are some of the things that I am looking at for sure, because here's one thing that I found very interesting. And this was a conversation I had with a friend of mine, and I think he's got well in excess of $1 billion that they own and manage on behalf of other partners as well. And they had done a lot of developments in Alberta, and they have institutional partners. And I said, so what are you working on right now in Calgary or Edmonton or wherever? And he's like, none. And I said, why not? Like, your office is here. You have good. He's like, because I can't raise money. He's like, I flew to Toronto to meet with our institutional partners. And the guy just said, if it's a deal in Alberta, let's just go for a beer, because we're wasting time. And it was just like, it was that blunt. But if you have a deal in Vancouver or Victoria or Kelowna or Toronto, I mean, that is where the money really wants to be, right? It is not hard to raise capital for those hot markets. You try raising money for a deal in Alberta, and unless you believe in the Alberta economy and market, it just becomes a lot more challenging to do that, at least in my experience, right? And if you're going after institutional capital, definitely, right? Like I've got a couple of good friends that are raising money, and they're doing big things, and they are like I said, like in that $1 billion range, and they struggle. So you can just imagine for a retail person like us trying to go out and raise money for a deal where people maybe are a little bit nervous about what's going to happen here. Frankly, I believe in the Alberta market, not just bias, but that's just my own personal beliefs in terms of why I'm investing here. And all my investors are pretty close to home too. So they see a long-term vision. And so that's kind of a check mark in terms of where I'm focusing my energy.
Well, and I think that's so important what you said there about the belief. And it's about kind of like transferring your belief to somebody else. And if you have the background and the facts and everything, and you truly do believe in it yourself, and you're investing yourself, and you're doing this, and you believe in it for your investors, that comes across. So I think just having that nailed down too, and then how you come across is everything. And if you truly do believe in it and you believe it's going to make you all money, then you will get those investors. Institutional ones might not be another, because they kind of look black and white paper, but if you're raising from investors that you can just, really be able to get that across, I think that's where it makes sense.
Yeah, absolutely. You're so right in the sense that a lot of it is your beliefs, right? Because it's the conviction. Because two people are going to come into a meeting, and the one person that believes in, Alberta, and the other person that's just like, nah, I don't really believe in it. If you have all the data and support, as well as the conviction that there's a reason to be here, they might all of a sudden be more open to, well, you know what? I didn't actually know that there was positive population growth, and unemployment was this, and household income is this. And, you're able to hopefully demonstrate enough both fact and emotion to potentially sway someone.
Well, and I think it's also the belief of you as an operator and as a person, because they have to believe in you as much as they believe in the market and the deal. So it's a combination of both those things that you have to bring them together, and then that's where the magic kind of happens. But you have to focus on both of those things.
Yes.
So yeah, I love that. You have given us so much knowledge and insight, and I've loved this interview. One final question is, what is the lesson that took you the longest to learn?
Certainly the biggest lesson, I don't know if it's the one that took me the longest, but it is around how important relationships are in this game of commercial real estate. And I do call it a game because when you're new and you don't understand the players and the properties and the rules of the game, then that's where people unfortunately get taken advantage of. But if you have one good person on your team, so I have lots now, right? In terms of whenever I go into a new market or whenever I am looking at a property, instead of spending weeks, which is what a lot of new investors will do, I will pick up a phone and say, hey, do you know that property at whatever, this cross street? Oh yeah, don't buy that. There's unpaid development charges to the city. There's no access. The zoning is going to be a pain in the ass. You can't build high enough because there's the airport over here. And it's just like, you can't pump people for information for free forever. There has to be a quid pro quo. But oftentimes, that one call can save you so much. We walked away from a 130 unit apartment building because I asked a general contractor who I'm now partnered with to come look at the deal. This is after I had a building condition, environmental appraisal. I was 2 weeks away from removing conditions. And he found something out at that property that changed our mind and saved us in the seven figures. And so, but that's a person, right? That is not because I didn't have the right people looking over my shoulder at that time, even though we had lots of experience. So I guess I can't emphasize enough how valuable insights and the right people can be in this business. And I would say that that might sound trite or I already knew that, but really focus on building those. Really, I think we've kind of hammered that point home, but you can't emphasize that enough.
Yeah, I totally agree with you. Great lesson, and something people really need to focus on. So where can people find out more about you? And is there a way they can get a hold of you if they want to?
Google my name. My website is Shane Melanson. So MELANSON.com. And there I've got a book. I give it away for free, or you can buy it and get, a bunch of training and stuff like that. And my podcast. And then you can follow me on some of the social medias, the Instagram.
What's your Instagram handle?
It's my last name, Melanson, Shane. And yeah, it's funny. So when we got first introduced, I looked at your Instagram and I showed my wife, Kelly. I'm like, okay, she has 230,000 people follow. I'm like, should I do time lapses? Should I do like, cause I was looking at what you were doing and I'm thinking, okay, like I have to figure this out because I've posted hundreds of, you know, images and videos and training, and I have like less than 400 people that follow me. So it's kind of laughable. I have a lot more on Twitter, even though I don't use it and whatnot. But I'm going to make a conscious effort of YouTube and Instagram this year. So I'll get some tips from you.
Yeah, everyone go follow Shane. We've learned so much from you, and we really appreciate your time. Thank you so much.
Thank you, Brittany.